Well, Chinese lenders saw slower profit growth last year as interest rate liberalization erodes margins, and China's economic slowdown deteriorates asset quality. And Hu Xiaoshen has more.
China's top 5 banks reported combined net profits of 926.6 billion yuan in 2014, up by only 6.6% from a year earlier, close to half that 2013 figure. At the same time, bad loans had surged to a new record high of 506 billion yuan by the end of last year. Experts say a number of factors are weighing on the lenders' profit growth.
First of all, the market is changing so quickly that lenders have fewer advantages in soliciting deposits, as China's interest rate liberalization accelerates. Secondly, traditional banks have no effective solution that deals with the massive expansion of internet finance. And third, the real economy is losing steam at an unexpected rate. Traditional banks are still operating in an old-fashioned way with old-fashioned risk management systems, which are no longer appropriate for China's economic development.
The banks are exploring new growth opportunities, and booming internet finance is something they cannot ignore. Even the top lender in China, ICBC, takes innovation in its digital services very seriously. Its financial statement for 2014 includes a paragraph explaining to the shareholders about how they've been catching up in the internet sector.
The bank designed internet finance products to enable customers to have the best experience and built a relatively complete internet finance service model. It developed the basic architecture of internet finance with a focus on the following 5 themes: payment, investment and wealth management, financing, on and offline integration, and e-commerce.
ICBC said more than 20 million customers used its e-payment products last year, while total transaction volume grew by 7.5 times compared to a year earlier. ICBC's massive customer base and physical branch network used to be its biggest advantages. However, the internet may be a game changer. The advantages could become a burden.
I think banks should reconstruct themselves to provide for future development. The Big Five could sell their branches to privately funded firms, as well as expanding overseas business so as to gradually give away the domestic market to privately owned banks. Cross-sector trading or the brokerage business would also be a good idea.
China's banks have become accustomed to a period of rapid growth in both the number of their branches and in the amount of their profits. That's all coming to a halt because of the country's economic slowdown, as reflected in those worrying non-performing loan numbers. Hu Xiaoshen, ICS for CCTV, Shanghai.